So let's talk about that, because part of the reason the investors aren't going to see that lag time is because Criterion funded over $1 million in down payment money to get the project started early. And we got control of the land. And then now when we bring in the investors and bring in their monny, we're already moving dirt and we're getting them right to the construction and hopefully shortening that window that we have their capital tied up.
Man.
See how I did that?
Man, we really did that?
Yeah, we did.
Well, you didn't necessarily do it. Brian and I did it.
That's great. Yeah, you
Did
guys
we not tell you about that?
Yeah. All right, how's it going? Welcome back to How to Invest in Commercial Real Estate, episode 101. Today's a super exciting episode. Today's an awesome episode because we have a special guest on, Andy.
Hello.
We're going to have to stop calling you a guest, my man.
Yeah, that's true.
Yeah. So Andy is officially come on board at Criterion as a principal, and he is going to be the director of capital markets. So Andy's specialty for a while, but especially at Criterion, is going to be helping source debt and equity. So I'm sure a lot of the investors, if you haven't gotten the chance to speak to Andy yet, you probably will in the near future.
Yeah, and you're going to be opening the Fort Worth office for us.
Yep. Got everything slowly moving in and getting it up and running. So it's a lot of space for just me, but it works for now.
Hey, we're going to expand. So hold on to it.
Don't think it'll take that long to expand.
I think being down in Dallas, Fort Worth area is going to allow us to have more direct connections with big players in the industry. It's going to give us access to commercial real estate talent. And, for those of you that call us saying, hey, when's the next deal coming? Well, Andy is a reaction to some of those calls. He's going to help improve and increase deal flow.
At least that's what he tells us.
Yeah.
It's been 1 week, and I think we've got 6 projects we're looking at and submitting some LOIs to some developers for funding. So should be a lot coming down in the next 2 months or so.
Yeah, and we recently just went down there to help open the office a week or so ago and met with the retail partners guys. They've got a ton of deals in the pipeline, so it was nice to get down and put we've met them before, but we haven't gone to their office. We got the opportunity to hang out with them for the majority of the day, so that was good. And that led to really this deal that we're launching now. It launched out recently by the time this has come out, so check out the website. If you're not on the investor list, you can still probably get on the investor list. You may be able to see the deal. It may be open. But anyway, this is another development with retail partners. So we just went down there and kind of scoped it out, and we've been working on it for better part of a month or two. And it's a really, really cool deal. And there's a lot of moving components, but essentially you have this massive tract of land, this big corner lot, and it's a grocery store. So it's Market Street, right?
Yep, so you've got Market Street, which is going to be the anchor. Lease assigned development will happen this year. That's Albertson's credit for about 85,000 square feet. They've already got LOIs trading to sell about 8 acres in the back to multifamily groups, and there'll be a gas pad as well, which will drive traffic. Kind of the neat thing about the project's the tenant mix. You've got Salad and Go, which is a fast casual or fast food, healthy restaurant. Fits the market perfectly. The average age is 34. It's grown 150% in the last 10 years.
So let me ask about that. This is, what is it, northeast of Dallas?
It is northeast. So it's kind of where
Northeast.
McKinney is, just go a little more further east.
Okay, so this is just starting to catch some of the overflow growth in North Dallas.
You're getting Anna, Salina, all of those northern areas are just exploding with growth. It's where all the young families are moving. It's more affordable than living in Frisco, Plano. You just can't buy a house for under $600,000 now, and you're going to get new homes for $350,000, $400,000 up there.
McKinney was in the same situation like 5-7 years ago where they were blowing up because that was the newest, closest suburb that, again, people can afford. It's kind of a drive to you can afford area, DFW.
Yeah.
And Princeton now is just getting overrun with these DR Horton spec homes to where it's really affordable to live.
There's like 10 master plan communities all going in, and you've got a growth rate of 5% per year. Not over the next 5 years, you got 5% per year growing.
And that's crazy for anybody that studies population growth of cities. I mean, that's really high.
Yeah. If you look at the tenant mix in there, I mean, there's a TLE, which is a daycare group. There's not another national daycare company out there. You've got average age of 34 years old. I mean, that thing should hopefully be fully enrolled 2 months after it opens. I mean, the young population fits well for kind of the salad and go, healthy fast food, as well as Fat Burger, which is an expanding concept out of California. And that franchisee's got about 20 million in the bank liquid, and it's just a very high net worth multi-unit franchisee. And the 7 Brew ground lease is being guaranteed by Staubach Investments, which is a large investment player in DFW, and he's guaranteeing the lease for all 15 years.
That's amazing. And we got Chipotle in there too,
Yeah,
right?
you got Chipotle, so you got the corporate investment grade tenant at the hard corner.
I mean, who can complain about Chipotle? I mean, it sounds like we're hitting it out of the park for the investors here. It sounds like a hot area.
Yeah, hot area, great tenant mix, great credit. Everything is going to trade at probably a lower price, so it should move pretty quick. Site work's already started. We should be able to hopefully have the Salad and Go and 7 Brew open within 6 months or sooner. And the Chipotle should be open probably within 8 or 9 months. And our goal is to hopefully have both of those sold by the end of the year and potentially have the Highway 55 pad sold too. That deal, all we have to do is do some site work and then it sells. So we should be able to exit half the pads within 8 to 12 months.
All right, so Braden, big picture, what is the deal size? What does the equity raise look like for the investors? And what kind of returns are we projecting for them?
Yeah, so quick and dirty, it's a $3 million equity raise, and that funds all of the land around the grocery store to fund the development of all of these pads. So there's a mixed bag. We've got some, like Andy mentioned, our build-to-suit, like Chipotle, the learning experience, where we're actually going in and building that building. There's some where we're essentially just buying the land. We already bought it. We have control of it, and we're selling the land, right? And then you have another mix of just ground leases. So we'll scrape the dirt, deliver it, rent starts in 6 months. So there's going to be funding spread out over the next 18 to 24 months in terms of distributions from sales, because all of these assets will sell at a different time.
So you're saying that the investors will get distributions as these properties are sold. Is that
Yes.
right?
Yeah.
Okay. And then we're going to raise a fund, and then we're going to use the money as needed to build the buildings and
Absolutely.
develop.
So the timeline is 18 to 24 months from, a month from now. We'll
for everything.
for everything. So we'll close on this deal and start the first gig. The GC is actually already scraping dirt on the first several sites. So we've kind of already broken ground and started, like I said. But we'll close this fund in the next month. 18 to 24 months from there is the projected timeline. And we're expecting a 25.5 IRR?
Yeah, 25.5 IRR, about a 138 equity multiple.
Is that to the investor?
To the investor.
Everything?
Yep, that's to the investor. That assumes some conservative underwriting, just not knowing what the market's going to do over the past 12 months. We took a little bit more of a slap on 15, 25 basis cap conservative underwriting on every tenant, just to make sure that we're in a good position.
So let me be clear for those that are listening. These are going to sell at different times. With the proceeds of the first few out parcels that sell, are we going to be paying down debt, or are we going to be distributing funds?
So we're arguing with the lender right now. It's still kind of up in the air on the exact distribution method from the sale. We're arguing and pushing, and we believe we can get funds from each sale, but obviously we're going to have to pay down debt every time we sell an asset. So we're just hoping to also get a distribution in line with the bank. Nobody wants to make their money on the last deal. Yeah. We don't think we'll be in that situation.
But the worst case is that we will pay off the debt, save the interest, and at the end of 18 months or whatever, when we sell the last of the pad sites or the parcels, then they'll get the remaining equity if they haven't received it back in all of the profit.
Yes, sir.
Okay. Still, 18 months isn't that long to wait. If you're making north of 20% IRR on your money in that time frame, I think it's a pretty good deal.
Well, that's not too much different than our other developments, right? Is 18 to 24 months later, investors are getting their money back, right? So it's not a whole lot different.
And what's nice
if
about
they
this
had to
one,
wait.
yeah, sorry. And then what's nice about this one too is you've got the permit in hand already, and you're already moving dirt on the site, so there is no lag. The money goes in, and you're hitting the ground building day one. There's not a 2-3 month to finish the permit process, so it should theoretically hopefully move a little faster because you don't have that lag time.
So let's talk about that, because part of the reason the investors aren't going to see that lag time is because Criterion funded over $1 million in down payment money to get the project started early. And we got control of the land. And then now when we bring in the investors and bring in their money, we're already moving dirt
it's
and we're
ready to
getting
go.
them right to the construction and hopefully shortening that window that we have their capital tied up.
Man,
See how I did that?
man, we really did that?
Yeah, we did.
Well, you didn't necessarily do it. Brian and I did it.
That's great. Yeah, you
Did we
guys
not tell
did
you
do
about that?
Yeah, it was great. I mean, that helped. Normally on a lot of these projects, we do have a month or two of lag time, just kind of getting mobilized in construction. But we can report good news on the stuff we've done so far. So the first retail development we did in Owasso with this same group, they've got foundations poured. We've delivered our ground lease pad. Rent's going to start in 6 months. That Salad and Go should probably be on the market for sale in about 5 months from now. So we think there's a possibility for an exit on that this year. And Andy told me the other day, we've already got tons of interest on the shopping center already. We had a 1,400 square foot vacancy. We think we have that locked up already, and that's been out there for maybe a month for lease. Yeah. So great activity on the first one.
Yeah, we're making good progress, by the way. I hadn't told you guys this, but there's a Salad and Go going up about a half mile from here, and we're about to pass them. They started 3 months ago.
Yeah, this is at Main Street in Elm.
Yeah,
I told someone that was Salad Go. They're like, no, it's not.
It is.
Definitely.
And so we're about to pass their progress, so we're doing good.
Well, hopefully the developer of that is not listening to this because you're behind. But anyway,
that doesn't mean he's behind.
We're excited about this project.
Fast.
We've got an office in Fort Worth now. We've got boots on the ground in Fort Worth. It's a contractor I believe we've used before. Like I said, we're already scraping dirt. The equity raise is already out. So go to the website. It may already be full, but there may be a last minute opportunity there. So really, really cool opportunity. And then like Andy said earlier, we have a pipeline full of stuff we're offering on right now. We think there's several opportunities maybe in Florida. We think there's some more opportunities in some shopping centers that we may hold. We haven't done one of those in a minute.
If we're doing Florida, can we do South Florida just so we can
on the coast?
Yeah, on the coast, South Florida.
Do you want to pay those land prices?
Maybe if it makes money.
If they're going to go up, we do.
Hey, but we haven't mentioned this is another exciting episode because it is freaking distribution time.
Oh, that's right. Yeah.
There's a confetti cannon.
Yeah, Tanner's going to play that clip of us throwing some confetti.
Yeah.
We'll keep it short because we've already done most of the show today. But every single quarter, we're sending out close to $1 million in cash to investors that have invested with us to the tune of maybe 200 individual checks. And Braden and I think, get to sign those. And I love it because people trusted us with their money, and we get to send out those checks, and that gives them confidence that we're doing exactly what we said we were going to do with their money.
I went out to my mailbox this morning and got one.
Yeah, which property? Hit us.
It was Redbud.
Okay, Redbud. Nice.
Yeah.
You should have already gotten.
Wait, was it Red? No, it was a precision one.
Stephanie, you got Stephanie check.
I got that.
You should have gotten Perimeter check.
What's the
Your
one in
Village
Arkansas?
South check.
Arkansas.
Rock Creek
That
check.
was it. Yeah.
We got checks coming out.
We got all kinds of checks.
All right, guys. There's lots of checks. We
Hey,
get it.
Then sign up and get your check. Let's go.
Get it. Get your checks in the mail, guys. It's also exciting to say we launched this last deal and we had a record number of investors on the list. So deals are going out to tons of people. They're filling up fast, and we have tons of opportunities. We have tons of checks going out in the mail. So, for a lot of people, I think they maybe turn on the news or listen to too much outside media maybe, and they just feel like the economy is in hell in a handbag, right? But we're getting on here saying that our portfolio is operating strong. We've got deals in the pipeline with strong returns that we believe in. And there's a lot of people still out there expanding and making great money and making deals work. So maybe hang out with different people or listen to different people that have a different perspective, because it's not all down in the dumps right now.
Yeah.
Right?
Yeah, for sure.
Yeah, I think if we could make it through COVID as we did when we first started, we'd probably make it through a little bit of a downturn.
Well, this was a fun episode. I'm sure we'll be seeing a lot more of Andy. Thanks for coming on, man.
Yeah, I just got to say it's a fun time joining. I'm happy to be a part of the team. I think I've worked with you guys pretty closely for 3 years, even before you started Criterion on some stuff. So
yeah,
I think we've done 5-7 deals together before this. So looking forward to doing a lot more.
For sure.
Alrighty, guys. Well, we will catch you next week on how to invest in commercial real estate.
Thanks.